DSCR loans in 2024. These are mortgages for investors. Hey, what's going on, everybody? It's Jeff Chavarthan, Jeff the Mortgage Pro. Thanks so much for joining me. I love talking about this topic today that we're going to look at. But first, before we get into it, if you could please do me a huge favor. If you like these videos, go ahead and hit that subscribe button down below. And if you really love these videos, go ahead and hit that like button. That really helps me out a lot. Thanks for doing that. I appreciate it very much. But today what we're looking at is DSCR loans for investors. This is one of my favorite topics to do. Because there's a lot of people out there across this country that still do not understand this or how to work this. And it's such a great opportunity for many people to be able to get into their first or the 10th or their 100th rental property using a DSCR loan to help them qualify for that. So let's start off with DSCR. What does that mean? It means debt service coverage ratio. And so essentially with this loan, what we're looking at is the cash flow of the property itself rather than the income of the borrower that's borrowing against the property. So those of you guys who have been in residential real estate investing know that typically for conventional loans, you have to use your own personal income to help you qualify for investment property financing. But with the DSCR, that's not the case. We're looking at the cash flow of the property itself. So let's go through this and look at some of the guidelines that are associated with the DSCR loan. And these are kind of a combination of lots of different investors' guidelines. So I want to make sure that you have an idea that all these situations might not be possible to every single lender, but we'll try to find the best scenario for you. And the most important thing to remember when you're doing a DSCR loan, I'm going to say this with any investment property, but in particular DSCR loans, the more the cash flow of the property is, the more attractive it is for an investor. So if you're really cash flowing on a property, this is probably a loan that you can be able to get. If you're marginal or just maybe a little bit under cash flowing, still can do them, but it's at the same time, it's not going to be as favorable terms for you to do that type of loan. Okay. So let's look at some of the guidelines here. So typically loan amounts go anywhere from $100,000 all the way up to $2 million. I haven't done a $2 million DSCR loan. I wish I had one, but I don't. But for the most part, most of them I would say are on the lower end of the spectrum of that, but anywhere from $100,000 all the way up to $2 million for these. These are obviously for investment properties only. So you can't do this on a primary residence. You can't do this on a second home. It has to be a property that you are not occupying as either a primary residence or a secondary residence. It has to be an investment property. This is for purchases, it's for rate and term refinances, and it's for cash out refinances. So you can do all three different types of transactions with a DSCR loan. And this is, again, the big point that I mentioned before. There is no personal income or employment info required when you're doing a DSCR transaction. Again, we're only looking at the cash flow of the property itself. And again, the greater the cash flow, the better chance you are going to have getting a DSCR loan. These are typically 30-year fixed loans. There are some investment or ARM loans available for these. I always run the numbers for you, so you can always decide which one is the best option for you. Typically, ARMs are going to have a little bit lower interest rate, but they also come with a variability at some point, and that makes it sometimes not the best option for you. So you can always take a look and see, hey, the 30-year fix is going to work or the ARM is going to work. Which one do I want? Okay. There are an option in some instances to do interest-only loans on these. And if you have a really good credit profile, it means you have lots of money left over in reserves and excellent credit, you probably can qualify for an interest-only option. So the rate ends up being higher, but sometimes your monthly payment is going to be lower with an interest-only option. You can have as little as 3 months worth of reserves. So remember what a reserve is. It's 1 month worth of principal, interest, taxes, and insurance. That's 1 month of reserves, and you can have as little as 3 months of reserves. So for example, if your principal, interest, tax, and insurance payment is $1,000 a month, then 3 months of reserves would mean that you need to have $3,000 left over in cash, stocks, bonds, IRAs, 401ks. All those things qualify for things we can use for reserve accounts. So somewhat liquid money or liquid money that's available in case something happens and you can't make the monthly payment for a month or two. Okay. This can go typically up to 80% loan to value, which means a minimum of 20% down, or you need to retain at least 20% equity if you're going to do a cash out refinance on this particular property. So 20% down is pretty much the standard. It used to be that you could go down to about 15% down. What I'm finding is that with 15% down, most of the investors don't want that. They want 20% down. They want you to have a little bit of a skin in the game there. And they want you to, if you could qualify for 15% down, the interest rate is like through the roof. So, and sometimes it has mortgage insurance if you put 15% down. So I'm going to say a minimum of 20% down. That's where I want you to be if you're going to try to get one of these DSCR loans from me. First time investors are okay. So, if you're going to buy your first rental property and you have, run the ways to try to do it conventional, it just isn't going to work that way, but you have the resources available for you to help you qualify for a DSCR loan, then you can absolutely do that as a first time investor. Some investors want to have you own your own primary residence. Others don't care if you own a primary residence or not. So just keep that in the back of your mind. That's another guideline there. We can do credit scores all the way down to 620. So if you have, credit that's not great, but you have a really, really good cash flowing property, then let's make it work. You can use a DSCR loan for that. Non-warrantable condos are allowed. Usually you're going to have a little bit more down payment if you're going to buy a non-warrantable condo. So probably more like 25 to 30% down if you're going to do that. But that's an option for you, whereas a lot of conventional loans won't be able to lend on non-warrantable condos. Okay. So DSCR might be the option for you to be able to do that. Short-term rentals are definitely allowed. What I find with short-term rentals is they absolutely cash flow if you've got a good one. That means that they're going to be a debt service coverage ratio of anywhere from probably 1.5 to 3. So it could be 3 times the amount of monthly payment that you have coming in for income, which is outstanding. A DSCR ratio, you'll definitely be able to get a loan with something that looks like that. And then lastly, just remember on these DSCR loans, these are the only loan for residential property that I can think of or that I know of that has what's called a prepayment penalty on there. So if you were to pay off this loan early via either refinance or you just, let's say, made a large lump sum payment and paid it down by a significant amount, then you have to pay the prepayment penalty. Typically, it's 2% of the balance that's paid. So if you have a $100,000 DSCR loan, 2% of that is going to be a $2,000 penalty. If you have a $1 million DSCR loan, that's $20,000. So it can get quite expensive the bigger the loan is with these prepayment penalties on there. They're usually anywhere from 0, no prepayment penalty, all the way up to 5 years. Usually, there's less risk for the lender at the 5-year mark when you're doing a DSCR loan. So if you have a 5-year prepay, the interest rate is going to be on the low end of the spectrum when you're looking at the DSCR loans. If you have a 0 or a 1-year prepay, it's going to be on the high end in terms of interest rate. That's just how a lender can help you, or helps them calculate risk of paying off a loan early. Okay. So those are the different parameters of the DSCR transaction. We're doing a lot of these all across the country. If you are interested in doing a DSCR loan, what I would love for you to do is schedule a call with me. I'm going to put my calendar link down below here in the description, and I'll also put it in the comments. So if you have a question about this or you want to actually get a DSCR loan from me, I'd love to be the one that helps you out this year in 2024 to be able to get your property financed appropriately. If you guys have any questions at all, please make sure you reach out to me, and I look forward to chatting with you the next time around. Have a good day, guys. Bye.